this more. Hao Hong is CIO of Lotus Asset Management and on the set with me here. A very good morning, Hao Hong. It's good to see you. Now, we've seen the Chinese and Hong Kong markets plunge yesterday, more than 3% losses across the board. This is the biggest pullback in the markets since Trump's Liberation Day tariffs. Have the markets been relatively insulated until now?
Yes, until yesterday, I would say. I think all the major markets, the Chinese markets has been more resilient than the others, even though Hong Kong has been under substantial pressure since late last year. When people look at Hong Kong, they tend to look at the Hang Seng Index, the Hang Seng Chinese Enterprise Index and HS Tech. But I think one more interesting index that people should focus on is the MSCI HK. MSCI Hong Kong Index, which has been performing substantially better than the Hang Seng Index. And I think because the MSCI HK is focusing on the local Hong Kong companies, which is benefiting from mainland flows and also from expansionary physical budget as well. So I would say that Hong Kong, you have to be careful what index you're looking at. For the MSCI local Hong Kong Index is doing exceedingly well.
We saw particular pressure on agriculture, on consumption stocks, tourism-related stocks. What sectors are you keeping an eye out right now?
I would say that probably energy is the only sector that's not going down. But then we all know that it's very volatile trade. It can go up 10% one day and then plunge 15% another. So I would say that we're trying to position to be very defensive. Because we don't know when this oil shock is going to end. So I think there are some value to be had. For example, the banking names in the market that is still paying 6%, 7% dividend, and it's trading at a very low multiple. And I think these kind of names tend to give you less volatility, at times like this.
So let's talk about that oil shock and the potential hit to global demand. Chinese exports and growth can be hit from this. How do you expect this to play out in the economy?
I would say that the Chinese economy has done quite well last year. I think also from the beginning of this year we've seen quite a bit of physical spending. Actually, the spending speed is actually picking up. I think there are some budget approval late last year, so people trying to spend the money since December. So that makes the January and February economic numbers looking quite good. But I think going into this oil shock episode, even though many people are saying that China is well prepared, China has been trying to develop energy self-sufficiency for a couple of years now, and now it's more there's more new energy supply in China. But the actual fact is that the traditional energy is still contributing 60% of the Chinese energy consumption, up to 60%. So it is still a very significant part of it. So I think if this thing goes on, then and if China deplete its oil reserve, then China would have to go back to the coal burning era, which is less efficient and then more polluting.
Do you think that this could spur more adoption in electric vehicles? We're waiting on Xiaomi to post their results today, and Xiaomi is amongst a handful of companies to raise EV prices because of an aggressive surge in supply chain and component costs. What do you think this will do to EVs?
Yeah, I would say that more and more people is taking up EVs, because it's so much cheaper to run, and I think oil price in Asia are bound to go much higher from here. So then, when that happened, then, people tend to lean onto EV a bit more. And also, for some of the EV models these days, they have this, fast charging function, that you can charge in like 10, 15 minutes instead of like hours, like back then. So it makes the adoption a lot faster. It's a lot easier for people to adapt. So I would say that, yeah, it's good news for the EVs. And I think the Chinese EVs has been sort of weathering the storm quite well as well.
As we talk about technology, I also want to get your take on what's happening with the rush to raise lobsters. Are you training any right now?
Yes, I think all of us are. Trying to make it do some simple work. For example, you can run a local database, right? So you can do some basic data crunching with the lobster. But I think once has to be very careful, right? So, because, there's security issues with some of the skills that involve. For example, they ask for permission on your computer to access your bank account, for example, or to access your email account and send out email on behalf of you, which you say something that you maybe don't mean to say, then we'll be in trouble. So I would say that, it's an interesting software. I think the Chinese is showing a very sort of very fond of the new lobster phenomenon. But I think people has to be very careful, and also people has to be very careful how much of the revenue that the lobster software can brought in for some of the software companies. I think right now some of the Chinese companies that has a similar software, they're trading at an exceedingly high multiple. So I would say that those tend to be overcapitalizing very high expectation going forward.
I'm reading here, according to a U.S. cybersecurity company, the OpenClaw usage in China is double that than the United States. Are there any particular tech companies that are doing well? I know that names like Tencent, Alibaba, Baidu, Zhipu, all of them have introduced some sort of lobster elements into their offerings.
I think in terms of token utilization, China is doing like two or three times as much as the US. But I think in terms of monetization, right? So I think there is a bit of monetization going on because when you use the lobster, then you have to pay for the token, right? So and you can buy a monthly package. Some of us is racking up by thousands of dollars on the bills already. So there is a bit of monetization going on. But I think the Chinese users, software users, are renowned for want to have it for free. So most of the software monetization model in China has been running on models such as you watch 10 minutes of advertisement and then you get a free token, things like that. So the Chinese would rather spend the time to do some meaningless tasks so as to avoid paying for software. This is really weird. So I think people has to be very careful like how much monetization these firms can do going forward. We all know that when the AI LLM models developed, many Chinese companies launched their own LLMs. None of them making any money. It's all free all the way until now. So we do see some monetization going on, but how much more they can do going from here remains to be seen.
There is that saying how time is money. So that's right. What that is. Now, the CDF already wrapping up the two-day event at the Diaoyutai State Guest House. And we heard from Tim Cook, who was representing the foreign executives taking part in this annual event. He praised China for its extraordinary pace of technological progress and proud to be part of that progress. And he gave an example that 90% of Apple production in China is powered by clean energy. The U.S. was the biggest delegation of the participants in the conference. What does this imply about the push by American companies, international companies into China?
I think Apple is doing very well in China, right? So I think last quarter is the biggest quarter ever for Apple, and I think China contributes more than 50% of the revenue and the earnings. So it's an exceedingly important market for Apple. But having said that, given the importance of the Chinese market to Apple, what else do we expect Apple would say in such an event? I think China. I think going forward though, I think China has been trying to open up further. So for example, in the past 2 years, we've seen financial sectors being opened up. Many of the foreign investment banks have their own fully owned brokers in China already, and also insurance companies as well. One shouldn't be too surprised to see the direction of further opening is here. So and also in terms of capital account, because the Chinese exports has been going really strong, right? So China has been accumulating a lot of trade surpluses and forex reserve. And plus, some of the forex reserve is actually stored overseas, for example, in Hong Kong. So it's a high time to open up, the domestic market, also the capital market. so that more foreign capitals can come in and participate in the Chinese growth.
Yeah, we're seeing Beijing loosening controls, the capital controls raising the quota for QDII, increasing the amount of money that improved investors can be investing outside and abroad. Will this help the mismatch of the world's number 2 economy and its limited role of its currency elsewhere offshore?
Yeah, I think for the 400 trillion yuan worth of M2. 399 is in China, so it's only a very little it is flowing overseas. So the Chinese yuan is not being used as a media for exchange or a measurement of value in international trades. Only it's being used in oil trade, for example, with Russia and also with Iran. So obviously the overseas use is very limited. I think also for the domestic investors, for years and years they have to do with very limited investment choice. So if you want to buy Nasdaq, for example, you can buy an ETF that is being traded in China. They use a return swap to mimic the return that Nasdaq can give you. But then the Nasdaq ETF trading in China is trading at about 20-30% of the premium to the Nasdaq. If you want to buy silver, for example, silver in Shanghai trading at 50% at one stage, 50% premium to the international price. It's just ridiculous. So I think for years and years, the Chinese investor has to pay hefty premium for access to international market, which is unfair, hugely unfair for domestic investors. So I think further open up the QDII would enable more and more investment choice for Chinese investors, and also lessen the premium they have to pay for international access.
All right, Hao Hong, thank you very much for the chat today. Let's do it again soon. We've been speaking with Hao Hong from Lotus Asset Management. Coming up, we'll bring you the latest on the Middle East war and discuss the position that Iran's allies have taken over the last month, including China.